Gold prices are schizophrenic. I literally have no other word to describe the volatility that we've seen today, Anthony. We start the day up 20, then down 50, then up 10, then down 6. What is creating this massive volatility? Gold's supposed to be safe.
So yes, schizophrenic is a word that we could describe for this current marketplace. Why? Because it's trying to find its legs, and I believe its legs are well over $1,800. My prediction is by the fourth quarter, end of the fourth quarter, Thanksgiving actually, $2,000 gold. Why? There's 20 some odd thousand D's 2000 calls open on our exchange that come due the end of November. So that's one of my catalysts.
And then what about fundamentally? I mean, what does Ben Bernanke's speech have to play into this? If we see markets kind of expecting more quantitative easing, that's good for stocks. You could argue in the short term that would actually hurt gold.
Well, actually, I'll be the contrarian on that. I don't believe it will hurt gold. Why? Because in order to create QE3, what do you have to do? You have to print money. Okay, in order to print money that's inflationary, we have higher crude prices. Although they're not $100 crude prices, they're still well above $80. So that's still an inflationary factor. So, and then you have the quantitative easing in Europe as well. Okay, Europe is in trouble.
Do you think we'll see more quantitative easing in Europe? Is that what you took away from this weekend of meetings of central bankers?
No question. I mean, they don't want to come out and say it, straight away. But there's the only way that they can get out of these things is to buy their way out.
So then why isn't gold up and consistently up $50 today, $100 today?
Well, because it had, like you said, these schizophrenic moves, and people are a little leery, so they are looking for decisive entry points and decisive patterns of trading so that they can confirm this bullish sentiment that I feel that we have going into the fourth quarter and without question the first quarter of 2012.
So you going long on these sell-offs that we're seeing with gold?
No question. I'm looking for entry points, like I told you before. Below $1,700, I do get a little skittish. There is a moving average down around 1650, 150-day moving average that a lot of traders, technical traders, are looking at. So those areas, 1650, and then again, below 1600. Do I think it's going to happen? No. I think we're going to favor the north side of 1750 and above 1800.
I just want to round out with silver here. It's sort of following gold erratically today, if you will. But you could also argue that the rebuilding we're going to have to see after Hurricane Irene in the U.S. was a kind of a de facto stimulus for silver.
Yeah, silver hasn't been having the great run that it had in early spring. It's floundering around. It's coattailing gold. If gold does get above $1,800 and sustains that $1,800 level, I think you'll see some safe haven buying coming into the silver because, your mom and pop investor might feel that $1,800 plus gold might be a little too rich for their pockets.
All right, thanks, Anthony. I appreciate it. So gold and silver definitely volatile, but Anthony, a long-term bull on both metals.